Internal Revenue Service IRS tax news. IRS says a paycheck checkup helps avoid tax surprises. IR 2020-149, July 10th, 2020, Washington. The Internal Revenue Service is reminding taxpayers that using the IRS Tax Withholding Estimator to do a paycheck checkup can help them have the right amount of tax withheld and avoid surprises when filing next year. And this is a nice tool. It's worth taking a look at. And usually they designed it, basically it was a modified from a prior tool, basically to help people to determine how much they want to have withheld from their wages. So in other words, if you work as an employee, then you got to fill out a W-4. So you fill out the W-4 so the employer knows how much to take out of your wages for your federal income tax information that will then be, you'll see on your W-2 at the end of the year. Now, as time has passed, the tax code has gotten pretty complex here, so that the form W-4 is not as easy to fill out. It's not always a straightforward situation. So you kind of have to do a tax projection a lot of times. If you have more than one job and you have other kind of deductions that are going on, you pretty much have to do a tax projection in order to have any idea how much you should be withholding from the paycheck. And so now the estimator tool is basically a projection tool now. So if you have a fairly straightforward return without too many things going on, this withholding tool can actually kind of predict your taxes. It's going to have to kind of project your taxes. You're basically doing a projection here, and then to help you determine how much should be withheld from your taxes by your employer, if that's the format in which you are making your payments, or otherwise, if you're making quarterly payments, possibly how much the quarterly payments would need to be. So that means that this tax withholding estimator is pretty good, like a projection type tool as well. So I mean, if you had other kind of questions, if you want to do some limited tax planning and say, well, what would happen if I put more money into an IRA or something like that, or increased or decreased the withholding, or did some other kind of change, maybe you might be able to use this tool. It's not as effective, I would think, as it's not as effective as a lot of software, but it would be a tool that you might be able to use to run some kind of scenarios on that. But at the minimum, the IRS is saying, and notice basically 2 years ago, in 2018, I believe, we had a lot of changes in terms of the tax code, which could result in people either owing money or not owing money and whatnot, because the withholdings changed and the tax code changed. So you might still have some differences from that point in time as well that you may not have straightened out since that change, and the estimator might help you to work that through going forward. Okay, back to text. Because income taxes are pay-as-you-go, taxpayers are required by law to pay most of their taxes as income is received. So the idea of the taxes, remember, is that the IRS wants you to, the tax return at the end of the year should just be, in an ideal world, an information return. Meaning you have taxes for 2019, let's say. You're going to fill out the tax return in 2020 for the tax year 2019. Ideally, you shouldn't owe money and you shouldn't get a refund. It should be just an information return, kind of like payroll taxes. But it's not, because the tax return is way too complex to do that. Because what's supposed to happen is they're saying, hey, you earn money during the 2019, you pay us as you earn the money. And then just like payroll taxes are done, but payroll taxes are a flat tax, so you can actually do that. Well, they're not totally flat, but the calculation isn't as complex, so you can do it. But with the income tax, you can't really do that. So the best you can do is kind of overshoot a little bit to hope for a refund rather than owing money, so that you can, one, avoid payments, penalties and interest, and two, hopefully get a refund and not be stuck with a payment at the point in time of paying. So that's kind of the point. So it should be an informational return. So the IRS wants their money as, in this example, 2019 goes forward. So that means that if you don't do that, if you don't pay them as 2019 goes, and you pay all your taxes when you do the tax return, that's not what the IRS is looking for. They're going to say you paid late. This is supposed to be just like an information return where you get a slight refund on it. So that's going to be the general idea of the taxes here. So there are two ways to do this. That means you're going to pay as you go. How do you pay as you go? There are two ways to do this. through withholding from paycheck, pension payments, Social Security benefits, or certain other government payments. So most people that, they have a W-2, the withholdings are taken from them. They don't have to think about it. It is what it is. Now, when people retire, then it gets a little bit complicated if they were a W-2 employee their entire life, because then they have to think more about, how much should I withhold and whatnot at that point from things like maybe Social Security and other government payments or whatever that might be there, and or possibly make payments when they get money out of a 401k plan or retirement plan, like a pension plan payments as well. So that's one option. And then you can make quarterly estimated tax payments through the year for income not subject to withholding. So the other option is to actually pay the IRS. So if you're a W-2 employee, you're kind of required to do some amount of withholding through the withholding for the W-2 employee. If you have your own business, that's the most common situation, where you're not going to have the withholdings because you have your own business, possibly a Schedule C type of business. Therefore, you have to make your payments in some other way. You still need to make them in the year in which you earned the money. So how often do you need to pay them? They're going to say quarterly. You got to pay them quarterly then, typically. Now, they pushed out the quarterly payments for 2020, but in 2019, we had quarterly payments that you would pay the IRS. Now, note that's a little bit different than if you're a W-2 employee. You might get paid weekly, which means they took money out of your paycheck every week, and quarterly payments only happen every quarter, which is a little bit different. But in any case, those are the two kind of ways that you would have to pay them, typically the typical withholdings or the payments during the year, in this case 2019. Back to the text. Income tax withholding is generally based on the worker's expected filing status and standard deduction. The Tax Withholding Estimator is a tool on IRS.gov designed to help taxpayers determine how to have the right amount of tax withholding from their paychecks. It offers workers, retirees, self-employed individuals, and other taxpayers a clear, step-by-step method to help determine if there is a need to adjust their withholding and submit a new Form W-4 to their employer. So, if you need to adjust your withholdings now, basically for 2020, you could do that, and then you can basically go to your employer if you need to, if your withholdings are coming out of your paycheck, and tell them that you need to adjust it. Now, the common error that people make when they do this is they say, hey, my employer is the one that's going to adjust my W-4 information. Why don't I go to Human Resources and ask them for advice about it? And the Human Resources won't talk to you because the company's afraid they're going to get sued if they give any tax advice. So the person's just going to say, I'm not going to tell you anything, right? That's typically what's going to happen. So just remember that when you do the W-4, you're not really going to get any help usually from the Human Resources Department in how to do anything. You're going to have to fill out the W-4 and then figure out how much you want to put in the W-4 with the help of possibly your tax professional. And then just fill it out, and then the person at Human Resources will do what they do, which is just to process the W-4 information. They can't really give advice, again, usually for liability purposes. Back to the text. The latest update of the Withholding Estimator provides detailed explanation of withholding recommendations on the results page. When to do a paycheck checkup. So when should we do a paycheck checkup? Taxpayers should check their withholding annually and when life changes occur, such as marriage, childbirth, adoption, and buying a home. So typically, if you go from year to year, usually your taxes are going to be somewhat similar. So if you have the same job and and everything this year is pretty much the same as last year, and there wasn't some complete overhaul of the taxes like happened in 2018, whatnot, then you can kind of check it, review it annually, and your withholding should be somewhat similar, you would think, each year. However, if you got a new job, or if you got like two jobs, or if your spouse got a job or something like that, or you have another child came into the world, congratulations. You might want to update your tax planning at that point too. Or a marriage or a divorce, or if you purchased a home, can have a big effect on the taxes. So any kind of those things that happen, you probably want to do the projections on it. And if you can plan some of those things before they happen, right, you might want to use, do the projections before and after just to might help you with the decision-making process if it's a factor. It may not be a factor, but in any case, if those things change, that's when you want to adjust the withholdings possibly, and because there may be a difference in the taxes that would be owed at that point. Back to the text, and just remember also that when you think about your withholdings if you're withholding from an employer, then if those withholdings are covering income more than the income you're earning at that employer, you got to take that into consideration. That's usually the problem, right? Because you might have income from one employer, but then you have a side business, so you're doing gig work or something like that, and you're making more money. Well, then obviously the withholdings that you're getting from the employer aren't going to cover the gig work unless you increase the withholdings. Or if your spouse has a job that there's no withholding, or has their own business over there or something like that, or if there's two incomes that are there that just basically increase the tax bracket that you are in. So then your withholdings are going to be too low usually in that case, because your combined withholdings are larger. So you got to take those into consideration. That's why the W-4 form isn't that easy these days to fill out, because everybody's circumstances are somewhat different. It used to be that you had one main job per household. One income household, one main job, and the W-4 then would be pretty straightforward because all the households would be somewhat similar like that. But now, income comes from all different sources a lot of times, so it's a bit more complex, and you kind of got to do some projections to figure it out. Back to the text, the IRS recommends anyone who changed their withholdings this year or received a tax bill after they filed their 2019 return should do a paycheck checkup. So if you filed your tax return for 2019, or if you're filing it now and you owe money, then that's an indication that you need to do it. You need to change your withholdings for the next year. You should check it out for 2020, because it's likely that you're going to owe money for 2020, and if you update your withholdings now, then you can adjust that. Now note it's the middle of the year 2020. The tax return for 2020 will be due in 2021. And that means if you're going to owe money and you have to increase the withholdings, you may have to increase the withholdings to the point where they're going to compensate for the fact that they were too low in the prior half of the year, right? And then in 2021, you're going to have to adjust it again, lowering the withholdings most likely, so that the proper withholdings can be taken out for the entire year and just have one withholding, then you should be back on track. So in other words, if your withholdings are wrong right now for 2020, and you think that they're not withholding enough due to the fact that you had to make a payment on taxes in 2019, then you probably want to adjust your withholdings, and they're going to be a little higher than they should be for the second half of the year because they were too low for the first half of the year. And then in 2021, you can adjust them back down to what they should be average for the entire year in 2021. Now, if you get a large refund, you're like, wow, that was a big refund. Then you could say, well, now your withholdings are probably too high, maybe. And so you can get more money by basically reducing your withholdings, doing your checkup and saying, I don't need like a $10,000 refund, right? I mean, I'm withholding too much, so maybe I can reduce my withholdings at that point and get more money back in that case. Okay, back to the text. Estimated taxes. Taxpayers with a substantial portion of their income not subject to withholding, the self-employed, investors, retirees, those with interest, dividend, capital gains, alimony, and rental income often need to pay quarterly installment estimated taxes. So if the main scenario here is where you have your own business, then you're making income from someone that's not required by law to withhold for you. So you're going to have to think about it more. If you got a lot of your money, if you're retired and you're getting money from investments and whatnot, then you're going to fall into that category as well, and you're going to have to make the quarterly payments. Back to the text. The IRS reminds taxpayers that various financial transactions, especially late in the year, can often have an unexpected tax impact. Examples include year-end and holiday bonuses, stock dividends, capital gain distributions from mutual funds and stock bonds, virtual currency, real estate, or other property sold at a profit. Form 1040-ES, Estimated Tax for Individuals, there's a link to that here, includes instructions to help taxpayers figure their estimated taxes. They can also visit IRS.gov/payments, there's a link to that here, to pay electronically. IRS offers 2 free electronic payment options where taxpayers can schedule their estimated federal tax payments up to 30 days in advance with IRS Direct Pay, there's a link to that here, or up to 365 days in advance with the Electronic Federal Tax Payment System, EFTPS. There's a link to that here. For information, there's some more links for information on tax withholdings, frequently asked questions, and whatnot as well. You have links to them here. There'll be a link to this in the description.